Yes, hello guys. Olariwaju, aka Larry B, and I'm also known as the eminent trader. And in this class, I'll be explaining leverage, lots, and margin. And one thing you should understand is that this aspect of learning is very, very important for you as a trader. You need to understand your leverage, your lot size, and what margin mean, so that whenever you are trading, there will be like a guide. And this is like the foundation that every trader should actually know. They are the foundation that every trader should actually know. But I will try not to bore you with too many theory, as I'll be showing you so many examples, because those are basically what you need. So the first things first, leverage. I'm sure everybody will have heard about leverage a lot. Leverage, leverage, leverage. Do not over leverage. I'm sure you've heard it a lot. Do not over leverage. Don't over leverage your account. Blah blah blah, like that, like that. And what do leverage mean? Leverage literally means what gives you access to trade large amount of currencies without having to pay the full value for your trades upfront. Leverage is simply what gives you access or exposure to large amount of capital or currencies without having to pay the full value of your trade upfront. In crypto, we call it trading with the money that you don't have. So leverage allows you to trade with the money you cannot afford. And if you notice, in the first set of classes that I taught you guys, I explained that if not because of brokers, individuals like me and you, we would not have been able to trade the Forex market, because the Forex market is capital intensive. And that is why prior to now, it was only institutions, banks, and some big organizations that venture into Forex trading of currency, buying and selling and the likes, because it involves a lot of capital. But when brokers now came, they made it easier for individuals like me and you to actually trade the Forex market without having to use so much capital. That is why even with your $1 or $2, $3, $5, $10 capital, you can actually open trades on your MetaTrader because of the leverage that you have with your broker. Do you understand? But if not for your brokers, you won't be able to trade with big capital. So that is why with your $50 capital, now you can open a $50,000 position with your $50 when your leverage is 1 to 1,000. Let me type it out so you understand. I'm sure whenever you want to, why is it not going? Whenever you want to register with, sorry, whenever you want to register with your broker, oh God. Sorry, whenever you want to leverage with your, register with your broker, you most likely be seeing something like this. Let me edit this. You'll be seeing something like 1 to 100, 1 to 50, 1 to 200, 1 to 500, 1 to 1,000, 1 to 2,000. Then I see, let me put this one. Why is this thing slow today? So I'm sure you'd have seen something like this when you are trying to sign up with your broker, or maybe your profile, you see them, they will say currency is 1 to 100, metals and commodities is 1 to 50. What this basically means is that with this leverage now, if your total balance or capital is $100, you can open a position worth 50 times of your capital. Then for this, you can open positions worth 100 times of your capital. You can open positions worth 200 times of your capital. You can open positions worth 500. So with this now, with $100, you can open a 50K, sorry, a 5K position on 1 to 50 leverage. With your $100, you can open a $10,000 account, sorry, $10,000 position with your $100. For this, that's like 20,000, 50,000, then 100,000 position, then 200,000 position with your $100. So leverage, that is the one major thing that leverage does for you as an individual. So the higher the leverage that your broker offers you, the more options that you have when it comes to trading with them. So that is just like a summary. We'll still go into the practical aspects. So the next one is lots. What are lots? Lots literally represent the unit of a base currency. Lots represent the unit of a base currency. You already know what your base currency is in the previous class. So a standard lot is $10. A standard lot is $10. Then the standard lot is $10, which equates to 100,000 units. Then there's what we call a mini lot. A mini lot is $1 per pip. Per pip. Let me put it so you can understand. It is $1 per pip, and that is 10,000 units. Then there is micro lot, which is $0.1 per pip, which equates to 1,000 units. These are the three types of lots. Whenever they ask you what are the type of lots, we have the standard lots, we have the mini lots, and we have the micro lots. Standard lots is $10 per pip, and it is also called 100,000 units. So whenever you go into your profit calculator, you'll be seeing either calculate by unit or lot size. So this is how you identify it. Standard lot is $10 per pip, which is also 100,000 units. Mini lot is $1 per pip, which is also 10,000 units. And micro lot is $0.1 per pip, which equates to 1,000 units. All right. So, oh shit. So as I was saying, regarding the explanation I did here, so let's say your broker gives you 1 to $100 leverage, which is the standard for most brokers. 1 to 100 is the standard for most brokers. It is the standard. Anywhere you turn to, you most likely see 1 to 100 leverage a lot. It is the standard. So let's use that as our example. 1 to 100 leverage. Like I said, that's the standard leverage that most prof firm offers. I want to do a class example. I already explained margin, but don't I? So let me explain margin before I get there. So what is margin? Margin is literally the initial deposit you pay or put down to open a leverage position and maintain it. For those that have already started trading before, if you check your MetaTrader, when you see your open order position and everything, you see a place where you see margin or margin percentage. Once you exceed that margin, you've already blew the account. So that margin is the initial deposit you pay or put down to open a leverage position and maintain it. Do you get it? Basically determines the extent to which you can hold a position or stop loss or the kind of trade that you can enter. For example, now if your leverage is 1 to 50, you cannot open a $10,000 position with your $100. So because it will exceed that margin of your 50,000 units or $50,000 that leverage gives your capital. So your $50 now in the actual market will be as if you are trading a $5,000 account. That is why with $10, some people can trade conveniently with a 2,000 leverage, which is available on Dairy. Dairy has 1,000, that's 2,000. So with your $10 account now, just multiply the 2,000 times $10. So with your $10 account, you can actually hold position. Your margin is enough to cover a $20,000 position or margin. That is why you will notice that when you are trying to trade with small capital and the trade is going your way, your margin is increasing. So that one you will understand much later, Sha, when you start trading actively. But just have it at the back of your mind that your leverage, your margin, and your lot size are connected to each other. They are connected to each other. So let me go into the example now. So for example now, let's say you want to enter a trade of one lot on GBP USD. That is equal to 100,000 units. Remember, standard lot is 1. So let me put these brackets here. So standard lot is 1. So that's 1 lot size. This is 0.1 lot size, and this is 0.01. So let me put it here so you will not mix it up. So let's say you want to enter a trade. You want to enter a trade of 1 lot on GBP USD. So if your broker provides you a leverage, let me copy this. So let's say your broker gives you the leverage of 1 to 100. Broker 1 to 100. So leverage. The broker gives you something like this. What this means is that your margin now. So I'm trying to give you a practical example. So your margin is now $1,000 capital. In the Forex market now, your margin is $1,000 capital. Do you understand now? So let's continue. So without leverage, so let me use practical example. So without leverage, and you are trying to use a lot size of, let's say let's say 0.5, 0.5. And that is your 0.5 lot size is $5 per pips. Use your calculator based on what you have here. Do you understand? 0.5 lot size is $5 per pip. So every pip movement is $5 normally. Remember, one lot size is standard lot and it's $10 per pip. So 0.5, which is half of this, will be $5 per pip. So the total value now is 50,000 units. That is half of this. Let me clone this. So the total value is $50,000 or 50,000 units. So that's your trade value rather. So that's the trade value in the market. So if you are using 0.5 lot size, it means that every pip movement is $5 and the trade value is 50,000 units. So for you to open a 0.5 lot size position, you need $50,000 or 50,000 units as your margin. As your margin, do you understand now? $50,000. So now this is an example. So when there's no leverage, that means you are trading your personal capital without leverage. So let's say the leverage is 1-to-1. That means the broker is not giving you any leverage. You are just using your capital to trade, just like that. That is 1-to-1 leverage. So this means that you need to have $50,000 capital before you can open a 0.5 lot size position without leverage. That's literally what this means. So you can see the importance of leverage. So if you don't have up to $50,000 in your account, you cannot open a 0.5 lot size position because it requires 50,000 units, which is also $50,000. So let's say in this instance now, you now make profit of, let's say, 200 pips. So let's say you make a profit of 200 pips times that $5. That should give you about $1,000. So that means you are going to make $1,000 profit on this trade with your $50,000 capital. You know you are not having any leverage. This is if you don't trade with leverage. This is how much you need to open just a 0.5 lot size. If you want to open a 1 lot size with 1-to-1 leverage, you need $100,000 capital in your account. So you are getting the gist now regarding the importance of leverage. That's literally the importance of leverage. So let me now show you when you now use leverage to trade. So let's say with leverage. So I'm trying to show you the two examples, the two practical examples. So that I'll be able to explain. Okay, so this is with leverage now, same lot size, same units, but leverage is different. So let's say you now have leverage of 1-to-100. So let's say you now have leverage of 1-to-100. What this means is that for you to have a margin of $1,000 or $50,000, you just need $500. Do you understand now? To open a $50,000 position, now you just need $500 capital on your account. This calculation works solely for currency pairs and commodities and metals. This is not how you calculate for synthetic. So this is solely for currency pairs in the Forex market, currency pairs, metals, and commodities. So you want to mix it up. So this is why with your $500 margin, you can open a $50,000 position here. So if you make this profit now, you make $1,000, but you are making it with a $500 account. Do you get the difference now? But for this one now, you need $50,000 to be in your account first before you can open this position on a 1-to-1 leverage. But with 1-to-100 leverage, you only need $500. $500 is 50,000 divided by 100. I don't need to be putting that here. $500 is 50,000 divided by 100. So for you to open this position now, you only need $500. So if you compare both trades now, you will see that having higher leverage is very important. Now imagine that your leverage is 1-to-1,000. That means you only need $50 to open this position. Do you get the gist now? So with leverage of 1,000 now, you only need $50 to open this required position. Remember, this is the required trade value and margin for this lot size or position size. So people call it lot size, some people call it position size. But for you to open this, you need to have this in your account. But your leverage covers for this. because of this. So if you have $500 in your account with 1 to 100 leverage, it means you already have that required 50,000 according to the Forex market. So it will be as if you are carrying a $50,000 account, so you can enter your trade comfortably with ease. Hope that is clear. And I noticed that XNX even offers unlimited leverage. So that means that with your small capital, you can open any amount of position easily. Even with just $1, you can open a $50,000 position with your $1 when the leverage is unlimited. But one thing you should understand is that higher leverage comes with high risk, and there's every possibility that you can make high profits also. But it has low success rate when you are leveraging too high. But one thing you should understand also is that leverage does not increase your edge. It does not increase your edge in any way. It only takes you to your destination faster. So for example, now, let's say you just need to know how to trade properly, regardless of leverage. As long as you know how to trade properly, leverage does not really mean much, even though it is a powerful tool for professional traders, but it is also a fatal attraction for emotional traders. So if you're an emotional trader and you're using high leverage and you're risking high, there's every possibility that you blow that account. So leverage is important, but the more you practice, the more you will understand. So try to go through this video again to understand this lot size and leverage calculation. In the next video, I'll be showing you how to do your position sizing using Nash market as a lot size calculator. Now, this part is very, very, very straightforward once you know how to do this. So I would always advise that you go for brokers with leverage that is higher than 100. We'll still get into brokers and profit in subsequent videos. But with this video, I believe you should already understand how lot size calculation and everything actually works. It is pretty straightforward. It is pretty straightforward. And in the assignment, you'll get so many examples and there'll be corrections. So you'll eventually get it. It's not really complicated. You don't really need to know this in depth like that, because there's a position size calculator that gives you the results in split seconds. Do you understand? But the bottom line regarding this part is that you need to trade with your small capital, focus on brokers with higher leverage like 1 to 100, 1 to 200, 1 to 500, 1 to 1,000. So with your small capital, it gives you an opportunity to like chill with the big boys. Do you get? But you still need to know how to trade. That is only when having high leverage will work properly for you. So in the next video, I'll be showing you how to use Nash Market to calculate your position size. I believe you've already downloaded the app, so I'll be showing you how to do this on your phone. It is very straightforward, and I'll be giving so many examples. So you can, if you don't have Nash Market, let me type it out so you understand, you know the name. It is called Nash Market. It is available on Play Store and App Store, both on iPhone and Android. It's called Nash Market. So once you download it, you get into it. So in the next video, I'll be showing you how to use it to your advantage, whether you want to trade somebody's signal or you want to trade by yourself. I'll be giving so many examples. So I'll see you in the next class. Thank you and God bless. I remain Olariwaji Kelaribe, or the Eminent Trader. See you in the next class.
Follow me for more educative contents like this.